Hello, I'm Nick Axford, Head of Research for Asia Pacific for CBRE, and joining me today to talk about the real estate market in Japan is Bill O'Connor, a senior researcher in our team in Tokyo. Bill's been with CBRE a while, previously in Vietnam, and last year moved across to join the team in Tokyo. Thanks for joining us, Bill. Let's start by having a look at what's happening in the economy.
Hi, Nick. Thanks for having me. The economy in Japan has picked up steam since the election in December. The new Prime Minister, Shinzo Abe, has put forth a new economic plan that the media has dubbed Abenomics. There's high hopes for this plan, and both the government and analyst estimates for GDP growth in the next couple of years have been revised upwards. We're now expecting GDP growth in 2013 to be 2.5%, and in 2014, 0.8%. That GDP growth in 2014 is a little bit lower due to the increase in the consumption tax that will come in 2014.
Okay, well, certainly we're hearing quite a lot about Abenomics and its impact on global politics and exchange rate policy. But just sticking with the impacts locally, how do you see the outlook from a supply and demand point of view in the Tokyo office market?
Well, in 2013, we're going to see a reduced level of new supply compared to what we saw in 2012. In 2012, we had a large quantity of new supply come online in the first half, and there were concerns about the long-term effect of that on the vacancy rate. There was decent pre-leasing activity, and the vacancy rate peaked in the second quarter and subsequently fell. This year, we're expecting only 45% of the quantity of new supply we saw last year, and we again have strong pre-leasing activity, so we expect the vacancy rate to decline.
That's obviously in overall terms, but there's some quite big differences in the vacancy rates that we see between the different qualities of space.
Well, we see the vacancy rate in the grade A space is more volatile than the rest of the market. Leading up to 2012, the vacancy rate in grade A space was declining as tenants sought the higher quality space. In 2012, as I mentioned, the large quantity of new supply pushed up the vacancy rate, but with demand being focused in the grade A, it's come down since then.
Okay, and turning to the outlook for rents, we've been waiting quite a while for grade A rents to bottom out in Tokyo, but from where you're coming from, you expect that to happen pretty shortly now.
Well, we think that we're pretty much at the bottom of the market now, and we're at a tipping point where we're going to see rents start increasing. Again, as I mentioned, with the rents focused on the grade A space, we expect that to increase about 3 to 5% through the end of the year. As I mentioned, the economy is expected to slow in 2014 with the increase in the consumption tax, but we still expect demand to be strong, and we still expect rents to increase despite that lower GDP growth.
And that's primarily because we are still seeing occupier demand focused on those better quality buildings in the best locations?
That's correct. After the Great East Japan earthquake in 2011, there was really a flight to quality, and tenants wanted only high quality, high specification buildings with the greatest level of anti-seismic resistance they could find. Another interesting point is that the rental gap between grade A space and the all-grade market has decreased by about 57% since the peak. And tenants are finding these lower rents very attractive, and that's stoking some demand.
Okay, and just moving on to look at the logistics sector, we've seen quite a lot of interest in that sector. What have you been seeing happening from a supply-demand point of view there?
Well, in the logistics market, the vacancy rate is at a historical low. After the earthquake in 2011, a lot of companies were relocating out of their own facilities into leased space that's much more modern. That, along with the growth in the e-commerce industry, has pushed the vacancy in the logistics market low. In 2013, we're expecting a large quantity of new supply, but with this continued demand and the strong pre-leasing activity that we're seeing, we expect the effect on the vacancy rate to be quite minor.
Yeah, and logistics clearly one of the sectors that we're seeing increasing levels of interest in from an investment perspective as well. Turning to the investment market, I mean, I think across various sectors we're seeing quite a lot of international investor interest in the market in Japan. A lot of it focused around Tokyo, but not exclusively. Largely part, I think, because people are focused on the potential turning point in the cycle, and that this just could be a good point at which to invest in the market. How locally are you seeing the investment market?
Well, investment sentiment is good, and our survey, the CBRE Tenkan survey that we did in January, indicates that investors across the board are seeing the investment market improving. That, along with the expectations from the implementation of Abenomics, is bolstering the investor sentiment. Additionally, the spread between the cap rates and the interest rates are very attractive, and that obviously is inciting investor interest.
Indeed. Well, thanks very much indeed, Bill. That's all we have time for right now. Clearly, there's an awful lot more to discuss about the Japanese real estate market. If you're interested, do feel free to download the many research publications that we have on our website, or indeed to contact the team directly in Tokyo. We do also have podcasts, presentations, and videos available through our various channels covering property markets right the way around the world. If you require any further information or assistance, please don't hesitate to get in touch. And we hope you've enjoyed this presentation and that you'll join us again soon. Thanks very much.